International Monetary Fund, who's releasing the update of the regional economic outlook for sub-Saharan Africa.
3% in 2020. And if the health crisis rolls over into 2021, it can reduce the level of global GDP by an additional 8% compared to the baseline. Now, moving on to what are the important policy actions the countries need to take. Firstly, on the health front, flattening the spread of COVID-19 using lockdowns allows health systems to cope with this crisis, which then permits a resumption of economic activity. In this sense, there is no trade-off between saving lives and saving livelihoods. Countries should continue to generously support their health systems, perform widespread testing, and refrain from trade restrictions on medical supplies. A global effort must ensure that when therapies and vaccines are developed, both rich and poor nations alike have immediate access. Now, while the economy isn't shut down, policymakers will need to ensure that people are able to meet their basic needs and that businesses can pick up once the acute phases of the pandemic pass. The large, timely and targeted fiscal, monetary and financial policies already taken by many policymakers have been lifelines to households and businesses. This support should continue throughout the containment phase to minimize persistent scars that could emerge from subdued investment and job losses during this deep recession. Policymakers must also plan for the recovery. As containment measures come off, policies should shift swiftly to supporting demand, incentivizing firm hiring, and repairing balance sheets on private and public sectors to aid the recovery. Now, fiscal stimulus that is coordinated across countries that have fiscal space will magnify the benefits for all economies. Now, moratoria on debt payments and debt restructuring may need to be continued during the recovery phase. Now, multilateral cooperation is vital to the health of the global recovery. To support needed spending in developing countries, bilateral creditors and international financial institutions should provide concessional financing, grants, and debt relief. Collaborative effort is needed to ensure that the world does not deglobalize, so that the recovery is not damaged by further losses to productivity. At the International Monetary Fund, we are doing our part. We are actively deploying our $1 trillion lending capacity to support vulnerable countries, including through rapid dispersing emergency financing and debt service relief to our poorest member countries. And we are calling on official creditors to do the same. Now, there are some hopeful signs that this health crisis will end. Countries are succeeding in containing the virus using social distancing practices, testing, and contact tracing, at least for now. And treatments and vaccines may develop sooner than we expect. But in the meantime, we face tremendous uncertainty around what comes next. Commensurate with the scale and speed of the crises, domestic and international policy responses need to be large, rapidly deployed, and speedily recalibrated as new data becomes available. The courageous actions of doctors and nurses around the world need to be matched by policymakers so we can jointly overcome the crises. Thank you.
Thank you very much, Geeta. Thank you, everyone, for joining us again. So we do have a number of questions that have already come in. Maybe I'll start with a few questions here, and then again I encourage you to keep on sending those questions. So the first question I have is from Phil Aldrich from the Times of London. The question he has is, this is the deepest recession since the Great Depression of the 1930s, but how deep was that, to clarify the comparison? and countries will be left with dangerously high levels of debt. Will we need to see a period of high taxes once the crisis is past to bring debt back to sustainable levels?
So during the Great Depression, so if you look at the period between 1920...
This was me right after I started my business.
The IMF regional outlook for South Africa there, Gita goes speaking about how $1.2 trillion is being now actively deployed to try and assist in the health crisis. Speaking, let's go back and listen in to that IMF briefing now.
So clearly, the magnitude of the collapse was much worse during the Great Depression. Now, in terms of world or global output, of course, data was more scattered at that time during the Great Depression, but the numbers that are out there are about a contraction of about 10% globally. And right now we have a contraction projected for about 3%. Now, this crisis requires timely action by governments, and that involves spending on the health sector, on firms, on households, and that can be quite substantial. So we are projecting debt levels to go up quite significantly over this next 12 months. The question is what happens next. Now, because we have a recovery that we're projecting for 2021, our debt to GDP levels will stabilize going forward. And the question is, how do you bring that down, or how do you finance that? As long as interest rates remain very low, as we're seeing, and we get the recovery that we're projecting, then the combination should help in bringing down debt levels slowly over time. Now, there will be some countries in the world that would require help, external aid, debt restructurings, but we'll have to see what that looks like once we come out of this pandemic.
Thank you. I have a question here from Eric Martin at Bloomberg. And the question is on the report. The World Economic Outlook only considers downside alternative scenarios, not upsides. Is that a sign of the times that we're living in, that things are expected to be bad and can only get worse from here? Question.
I think the best description of the sign of our times is the tremendous uncertainty about the outlook going forward. Downside risks prevail right now if you look at the developments around the world. Now, of course, that said, there could be positive news. There could be new therapeutics develop very quickly and things could turn much better. But right now, as we see it, downside risks prevail. And so we have explored the scenario where the pandemic, instead of receding in the second half of this year, which is what is assumed in the baseline, continues. And even worse, that there are outbreaks in 2021. If that happens, you can get a further substantial hit to global growth.
Thank you, Gita. So moving on to Delphine Toitou at AFP. She asks, what are the fund recommendations for governments to ensure a solid recovery when the pandemic is over, especially for advanced economies?
The strength of the recovery, firstly, is going to depend a lot on what governments do now during this period of containment. So it's very important that during this period of containment, governments provide the necessary support, economic support that's required for households so that they can meet their expenses, for firms, businesses, to prevent them from going bankrupt and becoming, exiting the market. So those measures are very essential, alongside, of course, important health measures to actually contain the virus. Once the recovery happens and we are past the pandemic phase, for advanced economies, it would be essential to undertake a broad-based fiscal stimulus. And this would be even more effective if it were coordinated across all the advanced economies of the world. So that would be one important step. Monetary policy should, of course, be data-driven, and if inflation stays well below targets, interest rates should also stay low for that period of time. And given that we've lived through this crisis, it's very important to prepare and to prevent something like this from happening again. So this would require building health systems around the world even more, sharing more knowledge, and being better prepared the next time around.
Thank you, Geeta. So I'm going to move now to some region-specific questions. The first ones are on Asia. So this is a question from Zhang Shi. So the question is, though China is gradually resuming normal economic activity, China will still be influenced by the supply and demand disruptions of the rest of the world due to the containment measures. How is the fund evaluating this as an impact on China's economy? Given this factor, will China's recovery be more of a U-shape or a V-shape?
So China was worst hit in the first quarter when it was the epicenter of the pandemic. In the second quarter, measures have started to come off. Containment measures started coming off towards the end of the first quarter. And so we are seeing signs of recovery. But again, we have to keep in mind that the rest of the global economy is now in the grips of the pandemic, and there are severe containment measures around the world. So that would have a big negative impact on, in terms of external demand on China's growth. I'd like to bring in Malhar over here if he would like to add something on to this question. Malhar?
Good morning, everyone. Yeah, I think the Chinese, as you pointed out, Geeta, the first quarter contraction in activity is expected to be quite severe. But it's important to recognize that there are signs of normalization now. The economy is getting back to operating. It's a very gradual normalization. The economy has policy space to support the recovery. With the spread of the pandemic to other regions, especially the important trading partners, there are going to be strong global headwinds to the recovery for China. But overall, with the momentum the economy had going into this crisis and the policy space that the economy has, we think it's poised to register a positive growth this year, albeit modest positive growth relative to the strong growth rates that we've been accustomed to seeing from the Chinese economy in the past.
Thank you, Geeta and Malhar. So I have another question now on Asia. This is from Republica Daily in Nepal. How do you see the economic fallout of COVID-19 in the low-income or poor countries like Nepal? What recommendations do you have for them to revive their economy after the health crisis subsides?
So for countries that are low-income countries, the challenges of this crisis are just manifold. On the one hand, they have to deal with a health crisis, with health systems that are not as strong as in the advanced world. They have lesser fiscal space to do the kinds of spending that is required. Now, for a country like Nepal, where tourism is an important source of revenue, this is a big hit because one of the sectors that has been most hit during this crisis is travel, tourism, hospitality, entertainment. What should countries like this do? I think at this point in time, it is important to do whatever it takes on the health front to make sure that the necessary spending is done. It's also very important to support your workers. Now, many are in the informal sector. That would require using mechanisms like cash transfers, using digital payment systems in countries that have those, to reach the daily workers who work on daily wages. And at the same time, support small and medium-scale enterprises so that once this pandemic ends and there is a resumption of global activity in all parts of the world, that these countries can also improve. I also would like to mention that for low-income countries that have high levels of debt burden, it is very important for creditors around the world, official creditors around the world, to step up and provide debt relief to these countries.
All right. So I'm going to switch regions and go to a number of questions we have received on Europe. So the first question comes from L'Opinion in France, and the question is, I would like to know why the 2020 recession you're forecasting for the euro area is worse for that region than other regions.
There are a number of variables involved there. So one, of course, is if you, for instance, compare the euro area numbers to what we have for the US. Now, the euro area started with lower projected growth, even in 2019, compared to the US. And so that's why the numbers look much lower now, though the revisions are approximately in the same ballpark. In addition, you see, compared to many other parts of the world, the euro area, Europe has been hit very hard by this crisis, and that is also another factor that plays an important role. I'd like to bring in Gian Maria here to see if you would like to add something.
No, I think you've touched on the main thing. It's really the severity of the epidemic, and in a sense, we are in a position where we are seeing now the pandemic slowing in Europe, but we are a bit ahead of where, unfortunately, other countries may be heading. So we've really seen the worst hit to global activity, and that is fully reflected in our current forecast. That's the main reason for the relative pessimism compared to other regions in the world. So Europe is a very open. European countries are very open to international trade. Many of them have actually, despite their size, quite a heavy reliance on tourism. Those are all sectors that are hit very heavily by the crisis.
Thanks very much, Gita and Gian Maria. So I have another question on Europe, again from our colleagues at Agence France Presse. The question is, given the huge increase in debt and deficits, how concerned are you about the future growth potential, especially for Italy, Spain, and France?
You know, this crisis, we have to first start by reminding ourselves that this crisis is a truly exogenous shock, and it calls for countries to step up and do the needed spending that's required in the health sector, for firms, for people. So the deficits are called for. What would this look like going forward? A lot, again, depends on the interest rates at which countries are borrowing and the interest rates at which they would have to roll over. Now, in the euro area, the substantial support being provided by the ECB on this front is helping keep borrowing costs low for many countries, including Italy and Spain. And as long as that is the case, going forward, once there is a recovery, we should see these debt levels coming down. Now, of course, there is a tremendous uncertainty about this crisis. There could be much worse outcomes. There could be much greater vulnerabilities across the board, including in the banking sector, and one has to keep a close eye on that.
Thank you, Gita. So another question on Europe, and this one is on the UK. So how does the UK's economic response compare to other nations, and would you encourage the UK Treasury to do more to support businesses and the economy? This is from Michael Blair at Sky News.
UK has taken a very aggressive approach. They've come in with large, substantial, very carefully targeted measures. So they have done all the right things at this point. Considerable support to firms and to households and to the financial system. I'd like to bring in Gian Maria if you would like to add something.
No, absolutely. Has been a very powerful response both from the Treasury and from the Bank of England. This is absolutely essential to allow the economy to restart. I would like also to refer back to something that Gita said earlier in her opening remarks. We need governments have responded very aggressively, as they should have. They also need to be very nimble and able to adjust their response to the changing environment. As you know, we're learning new things about how the epidemic spreads, about how long the epidemic will be with us, and policies need to be adjusted accordingly.
Thank you, Gita. Gianmaria. So I'm going to switch again here, and this is a question on the OPEC agreement and its impact on oil-producing countries. The question is, how does the OPEC agreement change your view on the MENA region and the Russian outlook?
They told us education is the key to success. Then they changed. So we built.
Gita Gopinath, the chief economist at the IMF, presenting an outlook for the different regions, as we said earlier on, actively deploying $1.2 trillion to try and assist in the coronavirus crisis. Also saying that the lessons that can be taken out of this is that there needs to be a better healthcare system built, and these are the lessons that we can learn for the next time there is a large health crisis. She also said that debt to GDP levels will stabilize over time. There is concern about the poorer countries in particular that she mentioned, but speaking about how debt will stabilize in the future. That was the IMF regional outlook. They dealt with Europe, the coming crisis that's coming there in terms of debt and the slow recovery that may happen. Those were some of the issues that were touched on in that.